What's good? What's good?
Yo.
Right. Go ahead. Get the people what they need. What they didn't know they need.
Getting that medicine.
Yeah. Yes, sir. Yeah, I'm looking a little rough, man.
Look, I ain't got no bald head or nothing, bro. We on the same page right now.
Yeah. But we got my boy Lewis. Was good, man. Oh, see, we got Manny on here. Got my boy Lewis. It's my partner. Give us some time to get a couple more people on here before we get started. Let me see here. Got my other phone. Let me get on Google. Coinbase. Yeah, I'm excited. Well, it's been like a minute since we did this, bro.
I know, right?
It's been a cool minute, like months and months.
Yeah, yep.
But we back. Y'all see what we rocking. Y'all see what we got on.
Yep.
Nas, Coinbase.
Hey, if y'all on here, man, y'all go ahead and I don't know how this live thing works. Can they? Yeah, y'all can share this live to some people, man. We're gonna be doing this a little bit more often, talking about investing, exits, and mergers and acquisitions. A lot of our people ain't having this conversation, so we looking to bring it to our people in our communities to educate you guys on this private equity stuff. Let me see if I can share some stuff too.
All right, so there we go. So, what you want to start with, Nas, or you want to start with Jay Z and with his Ace of Spade deal or the Tidal deal?
It don't even matter.
It don't matter.
Nope. Just run with it.
And Bitcoin went to 83,000. Good Lord. Coconut Curls 87. Welcome, welcome, welcome. We're just giving a little time for just a couple more people to get on, or for it to get out there. Queensbridge Ventures. Yeah. Okay.
Let's go. Let's get it started.
All right. Cool. So what's going on, you guys? Today you got the founders of Crowd WallStreet. Me, myself, and my business partner, T.L. We started this company. And today we just want to go into a couple of deals that we that's been circulating, right? A couple of deals that's been circulating with Nas and Jay Z. And you know that track just came out that they just dropped. So we just kind of want to touch up on some of those the details, I guess, of those deals that they've been in. Coinbase, Tidal, and Ace of Spades. I guess we're gonna go ahead and get started, man.
Yeah, let's do it. So first up, let's talk about Jay Z deal. You want to talk about the Ace of Spade deal?
Okay, yeah, let's do the Ace of Spades deal. Ace of Spades.
So first and foremost, the main reason why we having this live is because all of these deals that you guys are here or heard about when we talk about Jay Z, Nas, you know, these funds raising capital and all these things, this is what's called like the private equity space, like, you know, private market. Many of us are familiar with stocks, which is what's considered a public market. So basically what we're going to be going over, not just today, but when we do more lives, what we're going to talk about and kind of shed a light on is for you guys to understand everything that goes on before a company goes public. A lot of times people are not really aware of all the money deals that's going on prior to a company going IPO. So that's really what we're going to be talking about, what we're going to be breaking down today. We're going to teach you guys and show you guys the opportunities for you to participate, maybe not investing $100,000-$200,000, but building that momentum up to get to that level where you can start investing in big bucks and big companies and things of that nature. So that's like a little background. So in between us talking about these deals and just chopping it up, talking as casual, we'll be giving you guys some nuggets, some education. That way you guys can be up on game to understand this type of space. Because you have to remember, prior to the Jobs Act that just passed, this stuff was foreign to us. It was cut off from us. We couldn't participate in these type of deals. A lot of us didn't even know this even existed. You have some people that just thought that a company just start up and then they just go public and we buy stocks. But it's a lot that goes in it. So now we have opportunities to do the things that Jay Z, Nas, and all these other Chameleon, all these people do. So that's what we're going to talk about. So first thing we're going to talk about, Jam, is the Ace of Spade deal, man. What's going on with that?
Man, so, I mean, I guess as you guys know, what was this? I don't know, probably like around February or March, Jay Z sold 50% of his Ace of Spade brand, but for, and I'm going to Google it, that way I'll get these numbers right, $300 million, about $300 million. And, you know, we've seen a lot of people posting and sharing it. And then I've even had a couple people ask me, you know, like, I guess they have the mentality that only they can do these kind of deals, or only they can do that because they're Jay Z and Nas. But I think what people have to understand is that even though they're who they are, they didn't have the knowledge to do this up until like recently, within the last 5 or 10 years. So even with them having the kind of stardom they have, which helps them a lot, there's a lot of these deals that's done behind the doors, and there's a lot of people that they had to connect with to even get in these rooms to do these kind of deals. You know, before it was just kind of like you do a little clothing brand or something like that. You know, if you're a rapper, what is it? You do a clothing brand, or, you know, you do like, you know, just the same traditional stuff. But as you can see, a lot of these, you know, rappers nowadays, and these are the same rappers from back in the day, they're taking that business to the next level. When you're talking about flipping those dollars and investing, you know, now it's like investing on steroids. You know, where everybody, get you some real estate, but now these dudes is buying companies. So with this deal, he bought that company, Ace of Spades, for, I want to say, $50 million in 2013, around that time. Don't quote me, I'm looking at some stuff right now. And he bought that company for around $50 million. And you're talking about, you know, 6+, you know, on average years later, he's able to sell 50% of Ace of Spades to LVMH for, you know, over $300 million. And that's insane, right? Like that return on investment, that is crazy. And the reason he ended up doing that is because he was trying to give it another brand. He was going to promote that brand, and he was saying the dude was like, pretty much like, we ain't make this brand for black people. Like, we didn't make this for your kind. And Jay Z was like, you know, it's like, yo, okay. He learned the game, you know, educated himself, or got around the right people, and he was able to acquire this company. Originally, he bought 50% of the company, and then he bought the other half of the company, allowed him to have 100% ownership of this company, Ace of Spades, and then he was able to strike this deal with LVMH, and that's one of the biggest luxury brand holding companies in the world. Like all the top dealers, like all the top luxury fashion brands, whether it's liquor or clothes, you know, that guy Arnaud Benoit, he owns all that stuff or whatnot. So by Jay Z, even though he's the top, you know, the upper echelon in the music industry, when you're talking about business and people were, you know, $50+ billion, he still had to partner with the big dogs in that end. Like, he's the top game. Everybody go to him. But Jay Z is even smart enough to know, like, in order for me to get to that next level, I gotta partner with the multi billionaires. Chris Rock had the same one. He was like, you know, it's the difference between, you know, like, and nothing against Oprah and Jay Z, 1.5 billion is the difference between that and then Facebook. He said that if the owner of Facebook woke up with Oprah money, he'll probably kill himself. You know what I'm saying? So he understand, in order for him to get to that level, I got to get with these big dogs. And he was able to sell 50% of his company for $300 million. Then, you know, you talking about segueing from the Ace of Spades deal to the Tidal deal. and he was able to
Right.
sell a large percentage within a couple of weeks, a week or two later, a large percentage of Tidal for almost $300 million. So you're talking about $600 million in a time frame of a couple of weeks, in less than a month. $600 million deals. So a lot of people,
Right.
oh yeah, but that's Jay Z and this and that or whatever. But what is your take on people who say that, TL? When they see
So
these big deals, they just post it and it's like, okay, well, that's dope, and then that's dope for them, but how that's gonna help us? What is your take on that when people say that about these big deals?
I think for the most part, it's the lack of knowledge and understanding in this space. Because we see big numbers, we see millions and billions of dollars. Like, I barely got $100 in my account, so I know I
Right.
can't do that. And the ideal is it's not so much of our people focusing on the money.
Okay.
It's so much focusing on what's going on, like the deals that's being made. You get what I'm saying?
Right. Right.
So it's like when we look at it, yeah, we see, okay, he made $350 million off of Tidal. He sold, a percentage of that, whatever the case may be. We talk about it, but when me and you look at it, we're looking at it from a different perspective. We're looking at, okay, how can I get in a game where I can invest in a startup or buy a company, scale it, and turn around and sell it for a multiple, just like Jay Z did.
Right.
So you don't really have to like get into these deals where you have to invest $100, $200, $300,000. No, if you don't have that, you don't have it. But you can get in on a smaller level where you can invest a couple of $1,000s or even a couple of $100, what we're going to talk about towards the end through crowdfunding, where you can start learning. Because the thing is, like you said earlier, even though Jay Z is the head of the game when it comes to the rap industry, he had to surround himself around business people who understood mergers and acquisition, who understood how to invest in companies. Jay Z just make the decision on his own. Obviously, people talking about Jay Z and talk about Nas because they are a public figure. But when you really look at the team, he built the team around him, the people who had the knowledge and understanding on how to get these deals done. So I would say, like, for these people who's looking at these deals, don't look at it saying, oh, I don't have the money to do that. Look at how they're doing the deals and seeing how you can get your foot in the door to start doing these deals at a small level and work your way up to a bigger level. Yeah, that's what I say about that, bro. And then another thing too, what you had mentioned, and I see a lot of people talk about like how they'll say, they was kind of upset how Jay Z being black and having ownership of Tidal and Ace of Spade and how he's selling his ownership. Why he don't keep equity? Why he don't keep 100%? Why he got to sell? That's a problem with black folks who want to sell. But see, that comes with ignorance of the game, right?
Yeah.
I understand ownership is key. You have your assets where you have some form of ownership, but then you have some assets, especially in the startup game, like when you're investing in businesses, where, look at it, Jay Z sold a percentage where he still have equity in Tidal, but he just got paid out, a little over $350 million.
Yeah.
So when you think about the game is, I still have equity ownership in Tidal, but I'm hands off now, with the possibility of sitting on the board and still getting paid out dividends with $350 million cash, where I could repurpose that money and invest in other startups to flip that $350 million, right? So this is how the game is played in this industry. So like the little live that we was on, the little Zoom call we was on yesterday, where we was talking about like with startups, these what people are doing. They are starting in companies, investing in companies, scaling these companies, and turning around and selling them at a higher multiple.
Yeah.
And that's how they becoming millionaires and billionaires over the course of 3 to 4 or 5 years. And yeah, that's what I say, bro.
Yeah, it's crazy because I'm looking at some more details right now. And Jay Z invested in that company in 2006. All right, so a 50% stake he bought out of the brand Ace of Spades. He bought a 50% stake in that company in 2006. And they say that's when he made the song, Show Me What You Got, Lil' Mama. When he made that song. And see, Jay Z, he invested in a brand that resembles or identify who he is, the kind of music he make. That Ace of Spades brand is what, you know what I'm saying? So when the owner of Crystal did what he did, with Louise Roederer or whatever, that's the executive of that brand. When Crystal, they said what they said about, we didn't really make this brand for your type of people. Jay Z took that to heart and it was like 2006, and then 2014 he bought the rest of it. I'm giving y'all some facts just in case. You know, some people like to fact check or whatever it is. So he bought 50% in 2006. In 2014 he bought the rest. So now he's at 100% ownership of Ace of Spades. And then you talk about fast forward from 2014 to now, he was able to cash out on that deal. You see what I'm saying? I don't, and I love, you know, I love real estate. I think a lot of times a lot of people run to real estate because that's the popular thing right now. Stocks is right. But we're talking about, you know, acquiring businesses, and a lot of times you can buy real estate with a business, and then we're talking about stocks that's pre-IPO. You know what I'm saying? Getting our people to think on that level and that scale, because these billionaires and these $100 million deals is not made in the stock market. The same, like by the time you could make $300 million in the stock market, and then the time it takes me $300 million by investing in a company pre-IPO, like that time frame is different. Like it's different.
Yeah, you think about it.
Uh-huh.
Think about it. I'm looking like Jay Z when he invested in Tidal, took over Tidal. That was a 6-year flip. So he made $350 million in 6 years with Tidal. Like, that's crazy. You don't see those returns like that, like in real estate. You don't see them returns like that quick and that fast. And think about it. We're not talking about when you investing in something and you have to wait to start seeing returns, and then eventually you exit out and then you get a big paycheck. When you invest in a company, the moment you sign that contract, you're getting cash flow. Yeah. So that $350 million was just a dividend payout. But during the course of those 6 years, Jay Z was getting a check. He was getting a check from Tidal. And so, now, and the thing about it is,
don't let them get it confused with venture capital. See, startups, it's not like that. You're not gonna get paid right away with startups, but we're talking about acquisitions, mergers and acquisitions, you guys. So it's a big difference for those who probably know a little something or whatever. They, oh no, you don't get paid. We're not talking about startups. A lot of these businesses are already running and they're acquiring these businesses. So go ahead, T.L. Just wanted to make sure we, you know, let them know.
That's true, and that's the great thing about it. Let me answer this question: buying a business is getting your foot in the door to later go full throttle and buy the whole thing. And I'm hearing this right. It's different strategies to this. Like, there's so many ways to get into acquisitions, right? So it could be a way where you could just get a percentage of a company, especially if you bring in some form of expertise, or if you have a team, you have to come in with a strategy. So yeah, you can go in at a small percentage, scale the company, you know, show your value, and then eventually, a couple years down the road, you can get, you know, a majority stake of the company, right? So it's just different ways you can do it, just really based on your strategy. But based on what Jam said, that was Jay Z's strategy. He got a percentage of it, scaled it, and increased in revenue. Then he brought more to it because he brought value to the company. He scaled the company, so which granted him more equity in the company. The great thing about it too is when Jay Z brought into Tidal, it wasn't just Jay Z. See, we talk about Jay Z, but not realizing when Jay Z sold a percentage of Tidal, guess who else got paid out? Beyonce, Rihanna, J. Cole, Kanye West, Madonna, Alicia Keys. All these people pooled their money together. Listen,
group economics, man.
These people got millions and millions of dollars, and they're still leveraging other people's money. Why can't we do the same thing? So you talk about how can I get my foot in the door? How can we get to this level of doing things? Simple. Just like, you know, when we watch John Henry, when he was talking about Harlem Capital, how they first started, right? Them boys started with $2,000 together. They started with $2,000,
right? Well, they invested in like a bar or a dentist. They invested in something.
They invested into, I think, an ice cream shop, or they invested into a couple of small businesses, right? So this is the thing. When you talk about VCs and angel investors, right? These companies, like what we're talking about now, is just pure acquisitions, right? These are just companies like Jay Z and like the Tidal deal and the Ace of Spade deal. These are pure acquisitions. They're buying into companies that already have traction. They already have revenue, and they're just looking to scale that company. But when you talk about like VCs and angels, these firms or these funds, they are investing in early stage startups. These are companies that really trying to get that traction. They trying to scale their company. They trying to, you know, grow their company. And so when we talking about like Harlem Capital, who put together $2,000 just to start learning the process, it was a way of them getting their foot in the door, investing in startups, right? Did they have success? No. To my understanding, a lot of these companies that they invest in like a lot of small companies. A lot of these companies went flop, but they went in with the mindset that we know it's a great chance that we're not going to flip this $2,000. However, we're going to sacrifice these $2,000 so we can learn the game. Because at the end of the day, by them doing that, they get to learn how the process go. They get to build up a resume for themselves to learn how to invest in business. Harlem Capital grew fast. I mean, how much they got? Like over what, 200 something million, something like that.
Yeah, something crazy.
Assets?
Yeah, about 200 million. Yeah, they've been raising. They raised 50 mil, 40 mil, 10. Yeah, they over 100 million for sure, for sure. You know what I'm saying? It's like, and who would have thought? You know what I'm saying? It's like, you know, so they got college degrees or whatnot for the most part, but still to be black and be able to raise that kind of money is crazy, right? And nothing. Yeah, let's kind of go into this Nas, right? So that the verse Nas said, he said, winner in life, fuck a coin toss, I'm Coinbase, basically cryptocurrency, Scarface. Like it's like the way they brag is different. Like when your average rapper brag or whatever, he talking about what he got, couple of hundred, maybe an M or two or whatever, you know, $1 million. But when you talking about Nas and Jay Z, they talking about, you know, like $100 million, $1 billion deals. So when you listen to that track, the reason I love that so much is because that's what I'm attracted to. Big deals, the stuff that our people normally, oh, we can't do that. The government don't want us to win. Society is against us and all that. It's like, well, this is what I'm striving for, right? It's like, these are deals that get me going like, yo, how can I get in a $100 million deal? How? Like, how can I get in those rooms? That's where me and TL at. So we talking to VCs, angel investors, you know, different investment bankers. We want to get in these rooms right here. You know what I'm saying? Nas, you know, he's talking about Coinbase. So, you know, another company, what's the company, the walkie-talkie company that was just out where you could talk or whatever, the meetings. The one, what's the name of it? Oh God, the new app that just came out last year, TL. It was $1 billion evaluation.
Oh, Clubhouse.
Clubhouse. So everybody talking about how, oh, black people made this app dope. Black people made this app dope. But how can we get in the room? Why we don't got ownership? They need to give us ownership. Ownership is created by making deals. You got to get in there and make those deals. They're not going to just give you ownership. We so used to begging and begging. We need to find out how can we get in these rooms. What degrees I need to go to college for to speak that language, or what books I need to read to speak the language to get in these rooms. So when Coinbase when they first starting up and they raising capital, I'm one of the guys that I put 100K. You know what I'm saying? Me and like 10 of us, 10 of our partners, we put up 10K a piece, and we got 100K in that company in Clubhouse, and we got 5% of equity. You know what I'm saying?
See,
from when it first started. This is how we get in those rooms. Yeah.
But see, that's how
give us some equity, and we made it big. Black people built it up. But you got to get in the rooms and negotiate a contract. Go ahead, Tim.
But that's how Jay Z and Nas is really trying to speak to the music industry, because the music industry in itself, it's a short-term industry, right? Yeah. You know, you'll see rappers come out, they'll have one good hit, you don't hear about them no more. Or you'll see rappers come out, they may be banging for a couple of years and then they just fall off. And then a lot of times they end up broke because they're fully dependent on their income. And they're not taking that income and reinvesting into some income producing assets, where when the rap industry or the music industry fall off, they got something to fall back on. And that's what Jay Z and Nas, like, they picking up on that. And it's like, look, we can't depend on the music industry. We can't depend on royalty checks and stuff from the music industry. How are we going to get into the private equity market? How are we going to get into these acquisitions and these startups? Because believe it or not, that's the type of asset class. It's high risk when they're talking about startups, but you're gonna, as you've seen the numbers we talk about, you getting paid out. They're getting paid out millions of dollars. I'm quite sure Jay Z is getting paid more money than when he was getting paid rapping, doing this. Yep. You get what I'm saying? So it's like now it's a wake up call, not only for us, but for these artists, these people who like 40 years old trying to rap. This is the wake up call where we need to realize, look, our checks that we getting, we need to learn how to get into these things because I'm gonna call it for what it is. The white people been playing this game for a very long time.
Yeah.
Very long time. Yeah. So the thing is, we geeked up about stocks, which is good. Understand stocks is in its own asset class. But just think about you getting into these companies before they go public. Just thinking about the higher return that you would get when these companies go public versus you buying stocks. You get what I'm saying? So I want to get more into that because I want to bring some points home for us to understand how to build wealth, right? So Jay Z and Nas, they started their own VC firm, right? Venture capital firm. So Nas' company, his VC firm is Queensbridge. What it is? Queensbridge Venture Partners or something like that, right?
Yeah.
Here's the thing, though. Just like we said, like the music industry, like these artists, a lot of these artists, they know nothing about VCs, venture capital, private equity, angel investors, right? And a lot of y'all that's probably on here don't know nothing about it, right? But I'm going to tell you what Nas did. Nas surrounded himself around people who understood the game. And one of those people was Ben. What is his name? Horowitz?
Horowitz. Oh my God. Yeah, he's like, yeah.
He's one of the G's in the private space, right? He is a co-founder with Mark Adrianson? Adreessen, right?
God, yeah.
So Ben and Adreessen, they started their own private equity firm. These dudes flipped $300 million into $2.7 billion I think in 3 years. Listen, these boys flipped $300 million into $2.7 billion. But Ben, he the one kind of pushed Nas into getting into this space. And he partnered with Nas. Here's some facts, and you can research this. Ben, they venture firm, I think it's called A16Z. They just invested, I think them, Jay Z, and somebody else. They just invested into an NFT, right? But this is how Ben put Nas on the game. The shares, like when A16Z invested in companies, and they got shares of these companies, these startup companies, Ben gave Nas' VC firm shares of the company. So when these companies get acquired and go public, they put money in Nas' fund account. And what Nas did is took that money and flipped it and invested in other startups. That was some real stuff. And then I didn't even know, like, Ben, he's into hip hop. Like, he like Nas. He's into that stuff, I think he has a black wife.
He has a black wife. As a matter of fact.
He into this stuff, right?
Yeah.
So the crazy thing about it, like, some of the things that, like, so Ben Horowitz and Mark Adrians, they invested. They was like one of the early investors in Facebook, Lyft, Groupon, Slack. They invested in these companies. Like I say, based on these early stage startups that they invested in, they was able to flip $300 million into $2.7 billion. And that's $2.7 billion is considered asset under management. So just think about you managing $2.7 billion and you getting 2% of that every quarter. Every year. This is how that works, and we'll do another live for that. But just to get into
the thing is too, when we speaking these numbers, 500 million, 300 million, 2.8 billion, I want our people to hear these numbers. When we talking about this guy bought this company for 50 million and sold it for $300 million, I need our people to hear these numbers and think, oh, I can do this. This is possible. Like, I don't like the days of us hearing billions and hundreds of millions of dollars and being scared of those numbers is out. You know what I'm saying? When we start a business, let's start a business with, I need my business to be worth $100 million. You know what I'm saying? And giving that, as long as my business is doing 100K a year, right? Because the higher you set your goals, even if you don't reach that expectation, you're going to fail into what your originally plan was. So if you say, I want to get a business to 100,000 a year, but why not go higher? If you say for $1 million a year and you accomplish 10% of that million, you had 100,000 anyway, right? So why not, why not reach higher anyway, right? Like, why not go for higher? So like when the next time you hear these big deals, you know, like you in the room, like you in these rooms, you're not scared to talk these numbers or whatnot. I would have people try to discourage me, like, damn, these numbers is crazy. What are you talking about? Like, the only way you can do that is if you're in the NFL or if you're a rapper singing. I'm like, nah. The way to do this, the dope thing about knowledge, right? If you don't know something, you educate yourself, and then you surround yourself around the people who have the knowledge. That's me. Right? Everybody want to, be, they in the club and they popping bottles with the hip hop dudes and all that, whatever. Oh, he played for the Rams and all that. That's cool. But me and TL, we on LinkedIn, and I'm in downtown in LA, or we in Miami, and we in Brickell. We networking with the VCs. We networking with the niggas that got the bread. That's like, yo, okay, we gonna learn again. We gonna whoop. This is what we know. How can we bring value to the table? Me and TL is networking with the who's who in this space, to the point where they're going to know us by a name basis. We go into these different VC offices and private equity offices, and they, oh, TL Jam, oh yeah, that's them from Crowd WallStreet. We want to put ourselves in positions to where when we hear these numbers, 100 million, 200 million and all that, we're not discouraged. I see it. I see the comments. I read the comments. Oh, they only doing that because they da. Oh, this is the only reason they doing that. It's like, yo, y'all be hating and y'all don't even realize y'all be hating. As opposed to, how can I get in the game? But I see a nigga doing good, I'm like, yo, how can I do that? Nas he just made $300 million. These are the deals I need to do. TL, I said all the time, Magic Johnson says, the same amount of time and effort it takes to close $1 million deal is the same amount of effort and time that it takes to close $100 million deal. So why not do the big deals anyway? Why not? Yeah, I understand you start small, you mess up small, but in the meantime, you got to surround yourself around the niggas who's closing the deals. I want to be around the wealth. Like, I don't want to be around the rich. I want to be around the wealthy. Like, you feel me? Like, I want to be where the wealth is at. And that's where me and TL is at. Now, me and TL, we understood that the barrier of entry for our people is hard to get into the private equity and to get into the venture capital space, to get into these deals. So me and TL was like, yo, damn, I want to do venture capital. And I'm like, yo, I'm in private equity, but how can we get in these rooms with these people? How can we get our people and bring them up to the table? So next time another Facebook comes around or another Clubhouse, we can get our people to invest in these deals. 10,000 or 1,000, like, we get some of our people to invest in these deals. So what did we come up with, TL? How did we find a way to get minorities in these deals? And at first, we got to educate our people.
Yeah, we're gonna talk about that. We're gonna close out on that.
All in the end? Okay.
We're gonna close out on that. But look, okay. let's get into some of these deals, right?
Okay, yeah.
So Nas, his VC firm, Queensbridge Venture Partners, right?
There we go.
If you look at his team, right? If you look at his team, he have where we at? Some of his partners, like one of them, Anthony, right? He gave Anthony a shot, right? And this like piggybacking on what you were saying, Jam. Start surrounding yourself around people who's into the space or into the business where you want to go, who's making the deals done, right? And the point I'm bringing is one of Nas' homeboy, Anthony, he had a company, and I believe he had a company, whatever, that he was working on, but Anthony had no experience whatsoever in this space. And Nas, because he was surrounded, he was soaking up knowledge and he was learning around Nas, and Nas was learning from other people, because even Nas said it's like when he realized, like, man, I need to get into the tech space because, our people in our community, we're not up to speed when it comes to technology. And his whole idea was, how can I bring the tech space into the projects, into the community? And he understood that I had to surround myself around these type of people who doing it. And so Nas had to educate himself in this space. And Anthony was one of those dudes that did what Nas did. And that's how Anthony ended up becoming part owner of Queensbridge Venture Partners. And I'm quite sure now, he's probably worth millions of dollars right now because he's part of that. And so when we talking about, and the thing about it, to be honest, we talking about Jay Z, but Nas, I'm gonna go over these numbers. I'm gonna go over these numbers.
Listen, man.
But the person who we need to be talking about is Nas, right?
He might listen. He might be a billionaire. To keep it 100, the man.
He will be.
He
Look,
just ain't promoting it like that. Listen,
and that's the thing. He's not. And I think people start pulling on Nas after this Coinbase deal.
Exactly, strategic.
But not knowing Nas been in his name for a little minute now, right? So just some of the deals that Nas invested in, right? Y'all remember the company Ring? You see that now in everybody's house. Everybody got the little camera lights. The same company went on Shark Tank and got turned down. The same exact company went on Shark Tank, got turned down, turned around, and Nas, his company, invested into Ring, right? They invested into Ring. I wrote this down so I won't get this wrong. They invested into Ring, and in 2018, Amazon acquired They acquired Ring for $1 billion. $1 billion. And to this day, when you ask Shark Tank, like the Sharks, one of the what was one of the
Mr. Wonderful or no?
All of them.
All of them.
All of them turned them down, and they regretted it. They regretted it because Amazon turned around and bought the company out for $1 billion, and Nas got a payout of $40 million from a small investment that he did. I think he invested a couple of $100,000 and got paid out $40 million. The next one, he invested into PillPack. It's a company, a virtual online company called PillPack for medications and stuff like that. Guess who brought them out? Amazon, for another $1 billion.
Yeah.
When Nas was paid out, they didn't disclose that. And then Nas also invested in Pluto TV.
Oh man.
He also invested in Pluto TV, which was brought out by Viacom, and they paid out Nas $340 million cash. So just with these three companies alone, that's $2.3 billion that was paid out to Nas. So yeah, we're talking about, then you talk about Coinbase now. I think Coinbase, they invested like a little, like 100K. They say between 100 and 500K. Yeah, but just on the low end, they invested 100K into Coinbase. Coinbase went public. And I think when they invested into Coinbase, it was at $1 per share. And the Nas them had about, what it was, 99,000 shares. So you do the calculation, $1 per share, and they own 99,000 shares. And then when Coinbase went public, it was valued at what, 100 million or something like that?
Something crazy, yeah, something crazy.
Dude, so again, now check this out, right? So we're looking at, so Jay Z, he have a venture firm called Mercy Ventures. Like both of them, they named their VCs after the neighborhood that they was raised up in. So you got Queensbridge VC, and then you got Marcy Ventures, right? So, and you can find this stuff on Crunchbase. Like if you want to learn a lot of this stuff, go on Crunchbase. So Jay Z, this is Jay Z portfolio, right? They have over 20 investments. They have 2 funds. 10 of those investments are diversity, which is they invest into Black or Latina women businesses, right? They only had 2 exits, and then they only have 4 people on their team. So the 2 exits they had was, one of them was Factor, and which is a prepaid meal delivery service, subscription-based company, and another one is Squad. Squad was acquired by Twitter last year, matter of fact. So this is Jay-Z company. They invested in 20 companies. They only had 2 exits so far reported, and they invested in about 10 diversity companies with 2 funds, right? Let's go to Nas.
So we ain't trying to compare them like that. We just showing it because both of them is Black excellence, but everybody be on Jay Z and they just on Nas. But it's like
that's the point I'm making.
Yeah,
that's the point I'm making.
He chill. He behind the scenes with it.
So with Nas, he got 1 fund They made over 129 investments, 34 diversity investments, which means they invested in Black minority founders, and they had over 38 exits. 38 exits, right?
Bruh, that's insane.
The reason I'm mentioning this is not to compare them, but to understand that it's not disclosed, but Nas making money. Because if you invested in 38 companies and you invested in over 129 companies and 38 of them exit,
yeah,
that means that's 38 payouts that the Queensbridge venture partners pocket in a sense.
Right.
Took home.
And the question somebody might have, oh, so all those, when you say exit, all those companies went public. So as he alluded to earlier, a lot of major corporations, the Facebooks, the Twitters, the Amazons, they acquire these startups. So in order for you to cash out on a company, when you invest in it from the seed stage, it don't have to go IPO. Amazon buy a lot of these companies, and I don't know if you guys follow Amazon right now. Amazon got the whole medical situation going on. Like they're taking over the medical game. And so the company that they acquired, that you just said the name of it, that's probably the company that they leverage because the company already has the infrastructure in place.
Right.
They got the people that they hired, that's already hired and all that. So they just came in and put their money into that, and they're going to turn that into Amazon Medicine. And now you're getting medicine deliveries at your door. All because they just acquired a small company. Why start this from scratch when I could just acquire an up-and-coming company and we got the money to push into it? Also, it's going to be a tax write-off. So not only did we buy this company, but we have the cash flow and capital to expense in this company to help scale and grow it.
Yeah.
And they do it again. Whole Foods. Amazon acquire Whole Foods. So as you can see, if the big dogs is doing this, maybe this is something we need to look at. Maybe this is an industry that we need to look at. And now look, I'm not saying we're going to get into the $300 million, billion-dollar deals right away, but it's a lot of companies with these baby boomers and COVID where they people retiring, people getting sick, they can't run their companies. So you can raise capital with your peers to acquire some of these local companies. And we created a platform to allow these things, to allow our people access to be able to raise capital to acquire small companies. Real estate is dope. Real estate is like the pillar of wealth. But when you're talking about like, you want to listen. If somebody told you can make $1 million in a year, or make $1 million, or make $1 million in 2 or 3 years, it's like this stuff is expedited. They're buying companies, and 6 years later, they're selling them for hundreds of millions of dollars. Like, I want y'all to understand this, so that way when y'all sharing these posts with Nas and LeBron James and all these people, y'all understand. Damn, this is what Jam and T.L. was talking about. He just bought this company for $30 million 6 years ago. And now he sold 50% for $300 million.
Right.
Clubhouse started 6 months ago and it's already evaluated at $1 billion. A year later, it's evaluated at $2 billion. And we busting our ass. And it's like, yo, nothing wrong with small business or whatever, but it's like they're not spending no more energy and time in their companies that we're spending in ours. The only difference is we make a couple of thousand, maybe a couple of 100,000, and they're making hundreds of millions and billions.
Dude,
you feel me?
The key to that, what you just said, right? With small businesses, a lot of times people who are in small businesses, they're looking at growth is making more sales, right? But I'm sure the more we do these lives, the more the mindset of these people will start changing, because now what we're talking about, going back to what you were saying about Amazon buying in the medical space and things of that nature, right? This is what you call growth through acquisitions, right? So even when you have a small business, if you're looking to expand and grow, just for example, just use the medical field for an example. If I have a medical practice where I'm doing, let's just say, for example, I have a massage parlor, right? That I do massage. I got a small massage parlor where we do massages, facials, and things of that nature, but I'm looking to expand. It's a lot of things that you can do. Number one, you can start a franchise. Once you build up your first business, you can franchise another business where they're doing the same exact thing and have a couple of franchises out. That's one way. The second thing is you have to purchase products. All the oil, if you facial, all this stuff that you buying it from somebody, right? So another way to build wealth and to build assets of your company is find out who you're purchasing from and seeing how you could acquire that business or acquire a business like it. That way now you own a percentage of that company that you're working with. Now you own both companies. You have equity in both companies. Now you building up wealth and you building up assets, right? So think about that, and then think about, okay, if that's a distribution center that distribute all these materials, not only to my parlor, but also to other parlors, I know as a trucking company that's delivering these products. How can I acquire that trucking company or start my own trucking company or whatever? Like, these how they're thinking at this level. So again, don't get discouraged looking at the big numbers. We can do it at a small level. Just think about it. We're going to talk about what we're bringing to the table. But like, for example, like with us, we built like Crowd WallStreet, right? Just so we could talk about it. We're in the process of building Crowd WallStreet, which is, we started off doing reward based, but now we're in the process of launching our equity crowdfunding platform. And so what our platform will allow you to do is create a fund like Mercy Ventures and Queensbridge VC, right? You don't have to raise $85 million like Mercy did, or raise $300-something million, but you can raise $10,000, $15,000, $20,000 in a fund to acquire a business. You can do it, and we'll teach you how to do it. And so understand that we're creating an avenue for our people to get into this space, to start doing deals like this, right? And this is why we're doing it, because now, like going back to what Jan was saying, we was already heading that way. We was already building our own VC firm, our own private equity firm. We was heading that way, but we understood, like, how can we get our people on? How can we get our people access to this? Because at the end of the day, it takes a group to get this done. Jay Z ain't just buy a company just with Jay Z money. Nas ain't just buy companies with just Nas money. They got around individuals, they put their money together, and they made it happen. And so with crowdfunding, this is exactly what we're doing. This is exactly what we're teaching you. And we're not just building a platform for you guys. I'm gonna just be real. We're not just building a platform for you guys. We're gonna not only talk the talk, but we're gonna walk the walk as well. So we're gonna be bringing deals that you guys, that you guys will be able to invest in our deals that we bring to the table, right? So this is what
and here's the dope thing too, because the dope thing about it is that, so how, okay, so you guys, how we gonna get in these deals or whatever? So like right now, me and TL, we in the deal right now, a nice, multi-seven-figure deal that we in right now, that we getting together, getting some stuff situated with that or whatever, trying to get that situated, right? So how this would work is, let's say if you got your own business, right? You got your own business and you making pretty good money, right? But you got some excess capital that you got to the side. My business did a couple of $100,000 last year. I got some money to the side. You don't want to get at Uncle Sam, right? So me and TL come around like, yo, we got a startup on our platform that does this, and that. We already got a couple of private equity firms that we get this company to a certain number, they'll be more than willing to acquire it. You don't got to go IPO. You ain't got to go on the stock market to have an exit. It's a bunch of family office. A lot of people don't know what a family office is. It's a bunch of private equity hedge funds that's more than willing to acquire these companies. So now we leverage our people. We leverage the people that, hey, look, we raising $100,000, and we're gonna put that down to find, and then we're gonna finance it back end to acquire this company, and we're gonna scale it and grow it, and then we tap in with our peoples at the top end, and they come and buy us out. Not everybody getting these fat checks. Not everybody getting their payouts or whatever. There's so many ways to move in this game and to make exponential amount of money. Like, it's crazy. It's really crazy. And we gotta, the first thing is we gotta educate our people and soften the touch, soften the blow. You know what I'm saying? It's like, hey, this is how this works. This is what we do. This is what crowdfunding is. This is how you raise capital. Then when we come to y'all with the deals, y'all understand that first part, and then this don't seem too crazy. Oh, what are y'all talking about? How you gonna buy a business? I know about this is the game right here. This is the game. Yeah. So we're gonna do more lives like this, man, just to kind of educate. So educate our people. So when these deals come across social media, y'all see it on TMZ, such and such, just sold this company. Amazon bought this company. LeBron James raised $100 million. Y'all think LeBron James could have footed that himself? Yeah, he could have, but why? Why would I use my money when I could network and get in these rooms with these wealthy individuals? He raised $100 million from billionaires. He didn't go to Jay Z and Nas. Nah, he went to the big dogs that got the connections out there for his multimedia platform or whatever. And you know, now he about to turn up and he making movies on Netflix and all that. This is the game, man. Leverage your network. Group economics. You can't say a network is your net worth and you leverage it to make a couple thousand. That's cool. But we want to make hundreds of thousands of millions of dollars, man.
Yeah, it's all about social capital, man. A lot of us know about financial capital, money, money, money. But as you can see, what's really important is social capital. Who you surrounding yourself around. And that's really what these celebrities, these, you know, like you said, you know, LeBron James, they're surrounding themselves around these people who got money, who understands the game. And I like that, Daryl. Silverback Ventures via Crowd WallStreet. Hey, let's do it. We're in the process. We're in the process now, man. We should be having our equity crowdfunding platform up real soon. And I'm telling you now, once it's live in effect, it's a wrap.
It's a wrap.
Done deal.
It's up. It's up. So Derek got a question, T.L. Derek got a question. How can we raise that type of capital without having that type of influence? It's a great question.
Easy.
We just had this talk yesterday on a call with like 25 people on there, and me and TL did a call yesterday. And it was
yeah. I won't say it's easy, but it starts like right now. This is where it starts at. We can pool together. So, for example, with our resources and the people that we're connecting with, Daryl, with your resources, people you're connecting with, again, you got to think about it. We have to start somewhere, right? So we don't want to get caught up, like we said before. We don't want to get caught up in, $350 million, $450 million. We have to start somewhere. So, like I said, the same example I used with Harlem Capital. Harlem Capital started with $2,000, and they invested in multiple companies. Now, fast forward, 4-5 years later, they have over $200 million worth of assets under management, right? That's paying their bills and giving them a good livelihood, right? So the whole idea of how we all need to get started is start off somewhere, whether we raise our first 100K, whether we raise our first 200K, whether we raise our first 50K cash, start investing. Start investing into some startups, start investing into acquiring some companies, buying some companies. Start getting dude, we have the whole game plan, but we have to start somewhere. Because we can leverage our small influence that we have now, because I kid you not, once we really start making waves, once we really start making moves, the big people are going to be looking at us. Now, Jam already said it. We already got connections now with private equity VCs and these big boys. They just waiting on us to make some moves for them to make the right investments into us. So we just trying to bring people along with us. But like I said, we're going to leverage our own platform to get these deals done. But to answer your question, we don't have to be celebrities to make it happen. There are some people now that we know on LinkedIn and Facebook. Well, we know some people right now that's on LinkedIn making big deals, and you go to their IG, they probably only got 20 followers.
Yeah, 20 followers.
And they don't even got no Facebook page.
Listen, man.
But they making millions of dollars off of acquisitions and buying companies. So the whole lot, like I said, we're going to be doing more lives to start educating our people on that, leading up to us getting our equity crowdfunding platform up. Once it's up, well enough for people like yourself and others and people who you connected with, we'll all get on the Zoom call and we'll make some stuff happen. Like right now, we got a deal right now. What it is, a little over $5 million right now on the deal that we're working on right now. We're raising capital for. So we have that and then a couple of more things that's in the pipeline. So it's just a matter of starting and building on top of that. Just like how you did with real estate, Daryl. You started and you're building on top of it. Same exact thing. And then eventually people will start catching on. They'll start seeing the movement. And then from there, that's it. But not the whole, y'all. We agree we're going to give you guys an hour. But we're going to do more live. So we just talked about a little bit over, we didn't want to get into the nitty gritty of multiples and all that type of stuff. Throw people off. So we just really want to start talking more about these things that's going on that we see, because a lot of us are sharing it, but we're not really fully understanding it. So we got some more lives that we're gonna do. We're gonna be breaking down some of the stuff that Snoop Dogg, what's his name, Chameleon, Will I Am,
Oh,
a lot of them that's getting in jail.
what's the name too? Floyd Mayweather. But real quick though, Daryl said, or is it a residual return? Hold on, man. Answer my question. Yeah, I got you right now, Daryl. Look, I
ain't
beat him to it. I said, yeah. He said, yeah. So hold on, look. If y'all watched the interview with Floyd Mayweather and he was on recession proof, Floyd Mayweather was saying that he owns 7 skyscrapers in New York and a couple other places, right? So a lot of people was like, dang, like he owns 7 skyscrapers. But see, we gotta break all this stuff down. But the thing about it is that he don't own 100% of 7 skyscrapers. He owned a percentage. So when you're talking about private equity and venture capital and hedge funds, there's LPs and then there's GPs. And understanding the difference between a GP, a general partner, and an LP, a limited partner. And I'm just going to say this on that. A GP is the person who finds the deals. They construct the deals. They put the deals together. A LP, a limited partner, is somebody who invests in these deals. Now, a LP, in most cases, don't have too much say. They can just here's the terms of this deal. We raise in $1 million minimum. Here's the terms. Do you want to invest in this deal? Ask a couple of questions, but for the most part, that's it. The GPs are the ones that's what they're the most risk, right, TL? And they managing it, and this is what we're gonna do with this deal, and this is the exit strategy. So when you think about Floyd Mayweather, he was able to take his earnings from boxing and then kind of spread them out amongst these deals. And he said his first deal, he put 7 figures, he put $1 million, and he said he was making about $50,000 a month. So he said he went back in his account and took out 9 figures. And then he invested in some old skyscrapers. And then he was like, nah, I make over 7 figures a month. You see what I'm saying? So it's a return investment, and all those things will be on the different sheets and the different statements and all that stuff that you'll be able to read up on. But understand that GPs and that, so he don't own those outright. He owns percentages of those. Go ahead, Tim.
Yeah. So like
LP role, exactly.
Just like real quick, and we'll probably do another live talk about this.
Yeah.
Because like the question Daryl asked, like investing in a startup. So when you invest in a startup, more than likely, depending on what type of startup you're investing in, but more than likely, you're not going to see residual income. So understand, just like you have just think of it like this. You have a diversified portfolio. And in that portfolio, you have real estate, you have stocks, you have bonds, then you have where you can acquire acquisitions and startups, right? So with startups,
Daryl funny, man.
What did you say?
He said he want to make sure the credit I use will cover the
money. Startups, credit ain't gonna work for startups.
Yeah, this is startups acquisitions is more or less
mergers and acquisitions. Like acquiring a company, you can. So when you acquire a company off of credit, you can, because you buying a business that's bringing in revenue already. Startups,
nah, you get paid.
Startups are more high risk, and they take a little longer.
But
but now, startups are kind of exiting faster than expected. And again, like Jam say, most of these startups don't always go IPO. So you may invest in a startup, within 2 or 3 years, a company like Amazon or Stripe, they may acquire that company and you get paid out. So that's the whole idea when it comes to that. It's just understanding your strategy. So when you invest in an early stage startup, you're not looking for a quick return, but you're looking for a big return. So you're going to get a big payout investing in a startup.
Yeah.
An acquisition is kind of twofold. You're going to get residual income, and possibly, if you sell it at a higher multiple, and you would get a good payout. So it's just a matter of what your strategy is. So anybody, like, this is, for the record, this is not an investment advice. This is for educational purpose.
We're not investment professionals.
It's just when you invest in a startup, you're just allocating a small portion of your portfolio to a startup for the what ifs. But when you want to talk about getting into acquisitions, now you're talking about buying into income producing